What if I told you that the average American spends more on taxes each year than on food, housing, and healthcare combined? Yes, you work hard, you save carefully, and then the government takes a huge bite out of it. But here's the truth. There are legal, smart, and simple strategies that can dramatically reduce how much you pay. This isn't about cheating the system. It's about understanding the rules better than most people and using them in your favor. So in this video, we'll uncover why most people overpay taxes without realizing it. The difference between income taxes and consumption taxes, what types of money are not taxed, legal ways to cut your tax bill in the US, and tips that apply in other countries, and how keeping more of your money can change your financial future. Stay with me, because by the end of this video, you'll see taxes not as a fixed cost, but as a game you can win if you know the rules. Why you're probably paying too much. Most people never question their taxes. They assume, well, I earned money, so I have to give it to the government. But here's the reality. The US tax code is over 70,000 pages long. Buried in those pages are thousands of deductions, exemptions, and legal pathways to keep more of your money. Governments want you to think paying high taxes is inevitable. But in truth, smart planning can save you thousands, sometimes tens of thousands, every single year. Think about it this way. If you earn $80,000 a year, you could easily be giving away $20,000 and plus in taxes. That's like working 3 months of the year for free. Imagine if you could cut that in half. That's why we're here. 2 types of taxes you must understand. Before we talk about saving strategies, let's break it down simply. For individuals, taxes come in 2 big categories. Income taxes, what you pay on money you earn, salary, business income, investments. Consumption taxes, what you pay when you spend money, sales tax, VAT in other countries, excise taxes. If you want to legally pay less tax, you need to learn how to reduce both. Income taxes, the big one. Income tax is the biggest burden for most people. But there are many forms of income, and not all are taxed equally. A. Earned income, the highest taxed. This is your salary, wages, or tips. Unfortunately, this is taxed the most heavily. If your only source of income is a paycheck, you're playing the game on the hardest level. B. Capital gains, often lower taxes. Money you make from investments like stocks, real estate, or even selling gold and silver is usually taxed less. In the US, long-term capital gains can be taxed at 0%, 15%, or 20%, often much lower than income tax. Example, if you buy gold and sell it later for a profit, that profit may not be taxed as high as your salary income. Some countries don't tax it at all. Germany, for example, allows tax-free gains if you hold precious metals longer than 1 year. See tax-free income. Here's where it gets interesting. Not all money is taxable. In the US, some types of municipal bond interest are completely tax-free. Health savings accounts, HSAs, allow you to contribute, grow, and withdraw money tax-free for medical expenses. Roth IRAs allow your investments to grow tax-free and be withdrawn tax-free in retirement. Legal ways to cut your income taxes. Now let's get tactical. How can you legally pay less in income taxes in America? Max out retirement accounts, contribute to a 401k or IRA. You reduce your taxable income now, and your money grows tax-deferred. A Roth IRA gives you tax-free growth later. Use HSAs, health savings accounts. Triple tax advantage, contributions are tax-deductible, growth is tax-free, and withdrawals for medical expenses are tax-free. Leverage capital gains. Hold investments for over a year to qualify for long-term capital gains tax rates. Harvest losses to offset gains. Start a side business. Business owners get far more deductions than employees. You can deduct part of your home, car, phone, internet, and even meals if they're business-related. Relocation strategies. In the US, moving to states with no state income tax, like Florida, Texas, or Nevada, can save thousands. Globally, many countries don't tax foreign income if you live there as an expat. Use depreciation. Real estate investors use depreciation to offset income, sometimes reducing their taxable income to zero. Consumption taxes. The hidden drain. Now let's look at consumption taxes. In the US, these are sales taxes, excise taxes on things like gas, alcohol, and cigarettes, and other hidden charges. In Europe, it's called VAT, value added tax. Here's the trick. These taxes hit hardest when you spend recklessly. So how do you reduce them? Be strategic about big purchases. Buying a car. Some states have lower or no sales tax on vehicles. Timing and location matter. Buy used instead of new. Used goods often avoid sales tax. A used car, for example, saves you tax on the original price. Use tax-free days. Many US states offer tax holidays for school supplies, electronics, and clothing. Cross-border shopping. In Europe, people shop in neighboring countries to avoid high VAT. Americans near state borders do the same for lower sales taxes. Shift spending toward untaxed assets. Instead of buying depreciating goods, put money into investments like gold, silver, or certain collectibles that may not be taxed until sold, and sometimes not at all. Why governments don't want you thinking about this? Here's the uncomfortable truth. The government benefits when you don't understand taxes. If you don't know about deductions, you pay more. If you don't understand investment taxation, you stay stuck in the paycheck trap. If you don't realize consumption taxes add up, you spend without thinking. In other words, ignorance is expensive. By learning the system, you can legally keep thousands more each year. That's money for your family, your investments, your freedom, not for government waste. Other countries' tricks you can learn from. Even if you live in the US, it's useful to look at other countries. Germany. No tax on selling gold or silver if held for more than 1 year. Switzerland. Very low taxes on precious metals and certain investments. Portugal. No tax on foreign pension income for expats under certain regimes. United Arab Emirates. No income tax at all. Why does this matter? Because even if you don't move abroad, you can learn how different systems treat different assets and adjust your strategy accordingly. Why minimizing taxes is critical. Some people say, just pay your taxes. It's your duty. And yes, taxes fund schools, roads, and hospitals. But let's be real. Much of your tax money disappears into inefficiency, debt payments, and waste. If you earn $100,000 and lose $30,000 to taxes, that's not just money gone. That's investment power lost. That's compound growth stolen from your future. Over a lifetime, it's millions of dollars. The less you give away legally, the more freedom you have. Putting it all together. So, let's recap. Understand the two main tax categories: income and consumption. Shift from heavily taxed earned income to smarter capital gains and tax-free accounts. Max out retirement accounts, HSAs, and business deductions. Reduce consumption taxes, by being strategic about spending. Learn from other countries' systems and adapt their best practices. Remember, paying less tax isn't cheating. It's smart financial planning. And the sooner you start, the more powerful the results will be. Most people lose a fortune over their lifetime simply because they never asked, how can I pay less legally? Now you know. The system is complicated, but once you understand it, you can turn taxes from your biggest expense into one of your biggest opportunities. So take action today, because every dollar you save is a dollar you can grow. If this helped you see things differently, drop a comment and we'll answer your questions. Subscribe for more honest finance content, and remember, smart money doesn't sit, it moves.